I'll just to address a couple of the points that have been raised. There was a question about the impacts on rural Alaska, so initially in Alaska, insurance companies could use credit ratings to score for insurance premiums. They could just do it. There was no law prohibiting that. This came to a head in around 2002, 2003. When Senator Kim Elton had led an effort along with Senator John Cowdery to actually ban the use of credit reports, period. They could not politically achieve that ban, but what they could achieve was to say that insurance companies could consider the credit ratings on the first application, but not upon renewal, and so that's current law. But during that time, there was a report that came out. It's issued February 21st, 2003 by Governor Frank Wielechowski. It's called Insurance Credit Scoring in Alaska. And a speaker from Golovin asked if anyone could speak about the impacts on rural Alaska. And I can just, if I could, Mr. President, just read the summary of conclusions here. It said, based on the limited data received and evaluated so far, the use of insurance credit scoring in Alaska appears to have different effects on different groups of Alaskan insurance consumers. The survey data indicates that rural Alaska policyholders are more likely to be placed in the non-standard means more expensive, markets than our urban policyholders. The survey data also suggests that there is a trend for older consumers to move from the preferred market, which is a lower cost market, to the standard market and even non-standard market with increasing age. A determination whether the policyholder distributed between preferred, standard, and non-standard markets is due primarily to credit history, and other underwriting and rating factors is premature. However, the limited data do suggest that unequal effects exist on consumers with varying income and ethnic characteristics. In the aggregate, consumers that reside in higher income, high percentage Caucasian zip codes may be less impacted by the use of the consumer's credit history. And so there's studies after studies that have looked at. Missouri has studied this, Texas has studied this, the FTC has studied this. They've all reached a conclusion that minorities tend to disproportionately have lower credit scores. Thus, they have higher insurance premiums. So based on this research that was done in 2003, it was based on limited data, but it did suggest that those who were affected were those in rural Alaska, seniors, low-income Alaskans, and minorities. Now, another point that was made was, well, this is not really an increase on people's insurance costs. It's simply a decrease for those with excellent credit. And I guess, again, looking at the Consumer Reports analysis of insurance costs by credit score, they have concluded that those who are poor pay $2,001, this was a couple of years ago, on average, and this is for a new customer premium for adult single drivers with a clean driving record, and with poor, good, and excellent credit. So same across the board, just someone with poor credit pays $2,001, someone with good credit pays $1,528, someone with excellent credit pays $1,378. So I guess you could say, well, we're not penalizing the poor, we're just incentivizing or providing a lower benefit for those with excellent credit. But the reality is, those who are poor are paying $623 more than those who have excellent credit. Even those with good credit are paying $150 more than those with excellent credit. And I think that's not a good way to base insurance. And then there was another statement that was made about someone who testified, I think, in the Finance Committee, who was unable to keep their lower cost insurance premium upon renewal, and that we need to pass this bill so we can fix that. And I would point the body's attention to Section 4 of House Bill 195. It's on page 3. There is a section, there is existing law which allows insurance companies to consider a person's insurance ratings upon renewal, as long as the customer waives it. And so insurance companies don't need to pass a bill to allow consumers to consider their credit rating upon renewal. So if a person has a good or excellent credit rating, by all means, the insurance company is already allowed under this bill, under existing law, to consider that. And so we don't need to change law to do that. If insurance companies aren't doing that, I don't know why they're not doing it, but that's the current law. So I think the policy rationale to support this is very strong. I think the experience in California of it having saved $8,600 per family is significant, $100 billion in savings to the economy. An increase in, or actually a decrease in insurance premiums of 0.3% versus a 43% increase in everyone else's insurance premiums in that 25-year span is compelling. It's very compelling. We have an opportunity to save Alaskans hundreds, if not thousands of dollars. I urge us to take advantage of that opportunity. Let's not put more money on the backs of Alaskans in this time of economic strife, Mr. President. I urge the body's support for this. Thank you.